Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And just let's get into today's market. Saucy or froth, not frothy. Saucy action, volatile, down a lot, and the Dow finished down 115 points or something. The S&P up marginally, NASDAQ up some, and gold that was up. What a move for gold today! Gold that was up. Let me take a look. That was up around $23 and some change, and silver was up 29 cents. That's a pretty big move in today's market, and I think gold it's and silver sideways to down or sideways to up. Uh, I think it's just consolidating its gains. Not worried too much. But looking at the stock market, big news today. Let me share my screen real quick. So let's get into it. Yeah. If you look at it, New York stock says technical issues that caused Berkshire Hathaway to display down 99% is fixed. And I was going to say, this is one reason I see the market crashing over the next couple of years and basically staying down for a decade or two. These are going to become more going forward. You're going to see a lot more of these things. We're going to have something called the crisis of competency. This is YouTube and America, so we're not allowed to like talk about why, because I don't want to either go to jail or get fined or whatnot, or who knows what. But Berkshire Hathaway right here appears to be down nearly 100%. Trading was halted in Barrick Gold, Nescale Power, all dramatic falls. 40 stocks affected by the issue. Look at other notable stocks: Chipotle, Bank of Montreal. So if you look at it, we're going to see more and more the crisis of competency coming in. And then look at that: gold 23.80, silver 29 cents, up significantly today. So the other thing I wanted to get into is I was looking at this and I was just about to do a video. I wasn't even gonna talk about it. It says the stock market takes a narrow road to record highs last month. But if you look at this, let's I'm going to highlight it. Just six large tech stocks contributed to more than 75% of the S&P's 500 move in May, reminiscent. And this was, where was this? When was this? This was June 3rd. So this was today. And if you look at it, it's basically the Magnificent Seven has become the Sexy Six. And it's, rises in Apple, Google, Microsoft, Amazon, Meta, Navidia, Apple, Alphabet, Microsoft, Amazon, Meta, Navidia. Yeah, that's six. So we're seeing it's now the Sexy Six. So no more Magnificent Seven pretty soon. I do think Nvidia is going to top soon. And this just goes to show, if you look at this, those companies, they're not really companies, they're government entities. And if you look at federal government spends billions of dollars each year on technology services and sends billions of dollars. So if you look at it, a lot of their money, a lot of it, government contracts, a lot of it comes from $23 billion. Nearly 38 billion in IT, and agencies spent 23 billion. That includes Department of Defense, COVID pandemic. Remember all those other companies, technology companies that did so well. Yeah, that's You want to know where some of that COVID stimulus and relief went to? A lot of it went to technology and real estate. So, but going forward, gold's going up and done really well. But let's US economic data today. I'm gonna go there. Oh yeah, look at this. Remember, gold rises as soft economic data first spurs rate cuts. So see, I told you, US economic data, this is what matters. But let's go into the S&P global manufacturing 51.3. That was good, but look at the ISM 48.7. Not only is it below, but it is in contraction. So the ISM manufacturing and then construction spending, which generally consensus was 2%, 2% down 1%. So if you look at this, construction spending, ISM manufacturing, mixed data, but closer towards down. This has been the data since January, and this is why, plus inflation, this is why gold's been moving up. It's not China, it's not India, it's none of that BS. And in terms of this is bullish for gold. Bad data is bullish for gold. And if you look at it, what do we expect? Well, Microsoft plans to cut hundreds of positions in Azure cloud of business. Yeah, one of their businesses that relies not on government contracts, but the consumer doing poorly. So, don't worry, their government spending plenty of money. Microsoft will be fine. They will get their government contracts to make up, but cuts hundreds of positions in Azure. And then you have Google. Google Cloud Unit said to lay off employees this week. This was May 31st. So as you can tell, as you can tell, a lot of layoffs are occurring. A lot. This is going to hurt. And we heard with the Starbucks, the McDonald's, Target, all those conference calls that deal with the general consumer, they are not doing well. So I'm going to stop sharing my screen. I might actually share it one more time just to do a little update. This would actually be sort of cool. So let's go. It's right here. Let's just look at, a lot of people are wondering how well the gold performs the stock. A lot of people are like that. I don't think it matters. I made it. It's the economic data. There's times when the stock market and gold. So one thing I learned from Avi Gilbert is each chart is in and of itself. And I'm not really a big fan of correlations as much. I think they matter. I think there's capital flows to it, but I don't think it's gospel. And here it is. Right here, this is the SPY 11.3%, gold GLD 12.26 year to date. This is the Dow Jones Industrial ETF. And let's look at the year to date total returns 3.1%. So if you look at it, let's stop sharing. The GLD is outperforming both of the main stock market sectors ETF. So if you do believe in the gold versus stock market, you should be very happy with this year. Gold's outperforming. I think it will continue to outperform. There will be times when the stock market outperforms. That's just, I think, over the next, could be wrong, 20 years, I think gold will start to outperform. But yeah, if you look at this, gold, if you're a gold bug, you should be very happy, because even though the Fed's talking about higher for longer, if this economic data continues poorly, and we're starting to see like what they said about Starbucks, about McDonald's, about all these stores doing very poorly, it's starting to show up in the economic data. The higher interest rates is starting to lag a little bit, and the inflation really hurt, because even if you have a fixed mortgage, there's many other costs that involve. They have like the mortgage is only like utilities. That doesn't stop utilities from going up. That doesn't stop from your grocery bill going up. That doesn't stop from your health insurance going up. Eventually, you're going to cut discretionary from somewhere, and then that will cause layoffs. And there's other costs to repairs and maintenance. And when those costs go up, that cost of owning a home still goes up. And then some people might say, look, it's cheaper to rent than it is to buy. Even though I have a good mortgage, the cost of everything else is going up. So I can sell this house, get rid of my credit card, my auto loans, and all those debts, and I can rent. And I wouldn't have to worry about having a horrible credit score and whatnot. So anyway, that's all I have for today. Important stuff. And you look at it trajectory wise, the economic data is going down. That's bullish for gold. It might not be bullish for tomorrow, but that will be bullish in terms of if there is a downswing in gold, it won't be long because then the Fed will start easing. And that is the most bullish scenario, is when the Fed is easing for recession. So anyway, we'll have jobs numbers this week. There'll be other data. This channel, we always cover it. It's the most important thing. So we cover the most important things pertaining to gold. We don't make up stories here at the J22 report, hence report. And the economic data, if you look at it, it never fails. It's the one thing I've definitely nailed on this channel, is just look at the economic data. And that's what you can basically predict and see where it's going. So anyway, hit that like button, subscribe, and we'll see you next video.